Good afternoon and welcome to another part of the Impact Lender series. I'm delighted to have with me today Landbay, who are going to go through their products, and Beth and Helen will introduce themselves in a second. Landbay, one of our key lenders on the Impact panel. We've dealt with them for a long time, certainly very much in the HMOs, multi-units and limited company buy-to-let side. So what I'll do in a second is I'll pass over to Beth to go through their operation and their offerings. In the meantime, down at the bottom of the screen, you will have a Q&A part, so please do ask questions. I've got some questions at the end that I will ask Helen and Beth, but please do ask any questions as you go, and I will ask them live at the end of this session. So in the meantime, I'll step out and let Beth and Helen get on with the presentation and introduce themselves. And Beth, over to you.
Thanks, Dale. Afternoon, everyone. So I'm here with my colleague Helen. She also covers areas of the South. So we're obviously the BDMs who can help with your cases through Impact. So I've got a little presentation prepared. We're going to go over what's new with Landbay. Obviously, if some of you haven't heard of us or used us before, I will go over some brief scenarios of example cases that Landbay can help with. And then a little bit on limited company. As I'm sure you guys probably know, the limited company tax changes, 2020 is the final year, so they're now in full swing. So I thought it was quite topical to just go over that and where we stand and how we can help. So I'm just going to share my screen with my presentation, so bear with me. Okay, can everybody see that? Yeah, perfect. So a lovely picture of me there. Obviously I look quite different, but there we go. So right, what's new? I thought I'd do what's new Pussycat, like the Tom Jones song. So with Landbay, we've recently released title insurance, which is probably the most exciting thing and one of the biggest things for us, and we've been working on it for a long time. So what title insurance is it's something that the conveyancers do, and rather than doing full searches, we indemnify against those searches and we cover the cost of that. So it's completely free service to the client, and it does also save money for the client as well. So I believe it can save roughly between £400 to £500 per case, which is fantastic. As we know, legals is not one of those costs that you can often add to the loans, especially not with ours. So it's good to be able to reduce those costs. And it can also save a lot of time, which I know with packager cases, the more specialist stuff, time is often a big factor. And from other cases or other lenders that do this, I've heard that it can save up to 2 months. So 3 months kind of being the average for conveyancing, that can reduce it down to a month. So if you've got those cases that need to go through quickly, obviously you can consider us for those. It is only available on remortgages at the moment, and just standard properties and HMOs, up to £1 million loan size, and unavailable for new build, unfortunately. But those are the qualifying criteria for that. So if you do have any cases, best thing to do is speak to the solicitor who's acting for the case, and they'll obviously let you know if they can do title insurance. We also have just released some free valuation products, which is great because that's kind of a first for us. So the free valuation products are for standard properties. There is some restriction around loan sizes and property prices, but that's all written on the product guides. But again, if you combine title insurance with a free valuation, it just reduces those costs again for your clients, which is fantastic. And some things that we are still doing that I know other lenders have pulled out of in the market due to COVID. I know you've heard that about 1 million times over the past few months, but we're still doing student lets. So obviously we do HMOs, so student let HMOs, absolutely comfortable with. Capital raising for business purposes. So this is another one where, maybe if the client has, a building business and they're looking to put some money into there or using that money for further investments, absolutely happy with that. And we don't really ask too many questions about what they're doing with that money going forward. So if they haven't found a development that they're willing to put the money into yet, that's fine. They can wait a few months or even years until they decide to use that money. We are still doing large HMO multi-unit. So we go up to 12 bedrooms or 12 units, depending on if it's HMO or multi-unit. Still very comfortable with that. We've also got some packager exclusives which are available through Impact. So they are on small HMO, and the way that we break up our products is you've got small HMO is up to 6 beds, and then large is 7 and above. So there's some nice cheap rates and they're available through Impact. So if you do have any small HMO cases, obviously get in touch with your contact at Impact, and hopefully you can take advantage of these rates. As you know, with exclusives, they're, you've got to get them quick. So limited companies, what are the benefits? So limited companies, there's kind of two major benefits to that, and it's the tax benefits. So obviously the income that you get from the properties is generally more with limited companies because you're not paying as much tax on it. And also the stress rates. So most lenders will stress limited companies at 125%, us included, and personal names it will generally be a bit higher. So for purchases especially, I would say that a lot of our purchase business comes in on limited company, because people obviously haven't got to, if they already own the property, they haven't got to pay those costs of moving it in within corporations, which we can also do within corporations. So if you have got clients looking to incorporate their portfolios, again, get in touch with your contact at Impact. It's very much a case-by-case basis within corporations, and we're happy to look at those. And we've got very experienced underwriters who are happy to sit down with all of the information that we've got and make that, what's the word, common sense approach, common sense decision as to whether it's a case that we want to accept. So how can we help on limited company? Well, we do up to 4 applicants. So and we will take the income or the combined income of all 4 of them. So for experienced applicants, it's 15k. So each applicant only needs about 4 or 5 grand for us to accept that application. For non-experienced, it's 25k. So again, you still only need 5 to 8 grand each to kind of achieve that. We only underwrite majority shareholders and directors, so that is anybody above 25% shareholding or more. So this works really nicely. A good example is if you've got mum and dad on the limited company and then they want to put their children as shareholders for inheritance tax planning reasons. They can put their children on there as, say, 10% shareholding each. They don't need to be on the application. So I have a feeling you can have shareholders who are under 18, but obviously we can't have we can't have applicants who are under 18. I'm just to see your question there, Alan. I'm just going to answer those at the end, so I will get around to that. But yeah, so with the shareholding, it's we don't underwrite anybody who's a minor shareholder, which is great. We also can do layered limited companies. So if you have a parent company at the top, so say you've got Dale Jannels Developments Limited, which is a development company and is a trading business, and he's got subsidiary SPVs where he is the 100% shareholder and the director of both. We can consider lending to those SPVs, so absolutely fine. And I've seen layered limited companies that have 4, 5, even 6 layers, and as long as it's the same the whole way up, we can consider those. And again, if you're unsure of whether it is a structure that we're happy with, feel free to send it to Impact. You can send it on to myself or Helen or even one of the underwriters, and we can check that for you and make sure that we're absolutely happy with it. We do only lend to SPVs, so with specific SIC codes. Be testing myself now, so 68100, 68209, and I think 68320. If that's not right, I apologise. They are on the criteria guide, but we can lend to those. But a good thing is if you have a trading business that maybe it's built a development specifically in that company, and then once it's finished, it's going to cease trading, they can just change over to one of those SIC codes, or 2 or 3 of them. And the day that they've changed over, we can accept it. So there isn't any sort of length of time that they need to have those SIC codes on. It can be day one. We just need to make sure that the company's all kind of wrapped up and there's no issues there. So we can do things like directors' loans as well. So for incorporations, if the person is selling their buy-to-lets from their personal name into their limited company, we can accept the director's loan as the deposit, so they don't have to physically produce the cash, which is obviously great. And also, again, like I said, with the development companies, if you've got 2 companies and it's one company selling to another, we can take intercompany loans as the deposit again, so there's no need to stump up that cash. So that's quite useful for cash flow reasons. And then I then have some scenarios here for typical Landbay clients. So thought I would give you guys some scenarios, because I know sometimes with criteria you get bombarded and you just kind of only remember a couple of things, and it's always much easier to remember, you know, a little story and the type of person who might come to us. So obviously you guys can see there, you've got Mike, he's a portfolio landlord and a property developer. So straight away we can probably see he's going to have multiple income streams, so income from his land and property and income from his property development business. He's got 18 properties owned in his SPV, which is owned by his SPV, which is then owned by his trading company. So like I said with the example where you've got the trading company at the top and the SPV at the bottom. So he's just built a block of 4 flats, which he's looking to split onto leases. It was built in the trading company, but he'll be granting those leases or selling those leases to the SPV at the full market value. So we'll do that as a purchase. And we have a nice little quirky bit of criteria where if you have a block of 4 flats, we can actually mortgage all 4 of them, which saves you spending your time finding one lender to do this one, and another lender to do that one. So it just makes it much slicker. And it will be 4 separate applications, but we do luckily have a clone button on our system. So for the guys at Impact, when they're keying it on, of course, it's just a case of doing the first one and then cloning it a few times. Once it goes over the 4 flats, we then do have exposure rules that kick in. So it's 25% or 2, whichever's greater. So we'll always do at least 2 of them. But you know, quite a lot of the clients that we get do have multiple income streams, and you know, they are portfolio landlords, and we get a lot of developers as well. So the next scenario, so Mary has retired early on her private pension, and she's got 2 buy-to-lets for additional income and has combined income of 16,000. One of the buy-to-lets is unencumbered, and she wishes to buy another property, but she hasn't found one yet. But she has considered going to an auction for a bargain. But obviously with an auction, you're never really going to know what you're going to pay for it, and you might even walk out with a different property than you initially were looking at. The security of a property is next door to her residential and is ex-local authority. So Landbay can help Mary, and we, as I said, we don't require the details of that property that she's looking to buy at auction, because as we know, people's circumstances change, their business appetite may change. We're happy with ex-local properties, and we do have some restrictions around private ownership in the area, but I believe there's a website that we use where you can check things, and also the underwriters are happy to look into that for you as well, doing leasehold checks, for example. And properties next door to each other as well. A lot of lenders have issues with this because they think maybe they're just going to knock them into each other to make a bigger property. But, you know, we take that common sense approach and think, you know, if you had 2 buy-to-lets next to each other, you're probably going to get more money for 2 buy-to-lets than 1 big buy-to-let. And also, you know, as long as we've got ASTs in place and we can see a clear track record of that property being rented, there's no reason for us really to think that they're going to do anything like that. And also, yeah, Landbay offer the title indemnity insurance, so they can reduce conveyancing times considerably. So again, for an auction purchase, this is something that, you know, speed is definitely a necessity. So title insurance will be able to help that. And the last one, we've got Sam wants to start a portfolio of HMO properties as he has heard the yields are fantastic. However, he has only 12 months experience of letting property, which is an issue for many other lenders. Sam's been looking at the larger HMOs and wants a lender who can give him an investment valuation and not just bricks and mortar. He's considering letting the property to a housing association as he's been told it's a stable investment. We were able to help. So we only require a year's experience compared to some of our competitors who need 2 years. So that's obviously great for us. And we don't have any difference in experience levels required depending on the size of HMO. And as we go up to 12 bedrooms, you know, if he's wants to look at, say, a 10 bed, that's fine. He only, again, needs that year's experience. The investment valuations are a lot of brokers who deal with HMO clients will look for lenders who do investment valuations, and you often find that it's mainly the commercial lenders who, of course, charge higher rates and charge higher fees. So it is a great benefit that we offer that. So with an investment valuation, without getting too bogged down in the details, because that is quite complex when it comes down to the nitty gritty, but they basically look at the demand for the area. Does it require a certain type of planning permission? As HMOs, 6 beds require C4 planning in some areas, and sui generis once it gets over that. So the lenders will look at that planning and actually see the property as a different type of property rather than just being a regular single dwelling, which I know some lenders do value their HMOs as just like a 6-bedroom house rather than a 6-bedroom HMO. So investment valuations can, in the right areas, get better values for the property. It is completely down to the area and what the demand's looking like. So we can't guarantee that the investment valuation will come out better. But if that broker and that client really know what they're doing, they've probably already done the research and worked out that, okay, it probably will come in better on an investment valuation. So yeah, and they are a little bit more expensive than the standard valuations, but the fee scales are on the website. But obviously they are worth it because it is, it's not just the standard bricks and mortar. So now I will go to questions.
Thank you, Beth. Can we look at our first question that came in, which was, do you accept social housing tenancies?
So we can do tenancies from housing associations, yeah, and we can also do DSS tenants as well. So if you do have any housing association cases, then just send in a copy of the AST. It needs to be a maximum of 3 years on the AST length. But yeah, we can consider those, and we just need to make sure that it isn't being let to any type of vulnerable tenants, because unfortunately we can't accept those.
Okay, please keep the questions coming in. Q&A at the bottom. If you press on that button, and you can send us a question. I've got some other bits though for you first. Valuers, are they down valuing in the current climates? We're seeing a few that are starting to come in where they are actually down valuing the area, or depending on the area, sorry, depending on the demand for the tenancies in that area. What are you seeing at Landbay?
We're not seeing a dramatic volume of down valuations actually. I was furloughed up until August, and when I came back, I did think I would see quite a big drop, but I didn't, which I think is quite good. I think rents have probably dropped a tiny bit. I have seen a few cases where the rent isn't quite stacking up, because we offer 5-year fixes on the pay rate. It means that if they were looking at a 2-year fix and now the rental doesn't quite work, we do have an option to offer them. So it doesn't seem to be a dramatic decrease. It might sort of be 5% here or there.
Okay.
Yeah, I think there's not any sort of consistent pattern, and I think it's important to note as well that as a lender, we're looking to see where there are hotspots, where values are perhaps busier than others, or where they're perhaps swamped, just so that we can ensure that we maintain those levels of service as well. So looking at it very much from a service point of view as well.
Okay, and Helen, whilst you're still on, valuers, if we go into a full lockdown where valuers can't go out to properties, what's the contingency plan for Landbay?
We're currently reviewing our options where that's concerned. At present, we don't do sort of desktop valuations. So for us, it's all still in the pipeline being reviewed. And
hoping we don't go into a full lockdown, hopefully, from
my point of view.
As well. With regards to service levels, we're seeing quite a few across the industry, both on the high street and in the specialist sector, who are a number of days behind. I'm hearing stories from some of my guys where some lenders are 20, 25 working days behind at the moment. Where does Landbay sit with this?
So we're currently at 2 to 5 working days behind. So I've been told by a lot of brokers that that's amazing, which I'm quite pleased with. With our dips, if you get a dip refer, it will be 24 to 48 hours maximum, and some of them are coming in even quicker than that. If you're contacting us BDMs, as you probably know, we're all at home, so we are very easy contactable. So if you guys come back to me, I'll come back to you definitely within the same day, if not the same hour, with an acknowledgement response at least.
Yeah, absolutely. And the nice thing with Impact is in normal times, Beth is in the office once a week. And effectively, she's classed as like an on-site underwriter for us, taking on our trials and tribulations and getting them all sorted and so on and so on, which is great. Availability of funding, how does that sit with you guys?
I'll let Helen take this one.
So this is constantly something that's being reviewed. We no longer have the retail side of our funding platform, so we are an investment funds only. We signed the £1 billion funding line not so long, was that last year? You know, and you know, we're constantly out there with other funders. We're here to lend. We want to lend. We've got some, you know, great long-term goals and short-term goals, and yeah, funding isn't an issue for us at all.
It's good to know. Good to know. Okay. Other things that we're having problems with at the moment is cladding, especially with regards to having properties being able to be signed off by certain individuals. EW1S forms being signed by the right certified person, and so on and so on. Where do you sit with these, and especially with the new build properties?
So we recently changed our criteria surrounding high-rise blocks. So we have reduced our maximum number of floors to 5 because of this issue. So it's you know, it's obviously frustrating for us because, you know, well, Paul Clampin, who's our head of lending, he was saying that for the EW1S forms, so that is, he was saying that if they were to do a survey on every single one in the country, it would take a number of years to do these because there's not that many people who are qualified to do them. So I believe if they have them and it is within our 5 floors and the person who did it had the right qualifications, then we can accept them. I believe that the floor issue it's to do with more the PI cover of the valuers. So, you know, I think if you can speak to any valuers, you know, and if we speak to any valuers, we're obviously going to be asking, well, is that going to be sorted? And I do think this is going to be something that needs to be addressed from, you know, the regulator rather than specific, you know, each lender individually, because, you know, as you probably have seen, there's many people sat in buildings now, high-rise buildings, and their properties are worthless because nobody can value them. So, you know, it's definitely something that will come from, you know, above the lenders really. But yeah, where we sit is anything over 5 floors, unfortunately, we can't take at the moment. Okay,
we're seeing some new builds actually come on board where there's just a small part of cladding, maybe on the garages or something, right at the bottom of the building. And that's what we're struggling with because only one person or 2 people can sign them off in that area, and so on and so on. But also, obviously, it's great that you guys have a manual approach. What's the trend within Landbay at the moment? Are you seeing the single buy-to-let landlord in the distance, and it's all portfolio landlords, or are you seeing new people investing money into properties?
We are seeing a few first-time landlords. And we do find that it's things like inherited properties or maybe sort of let to buy, the more consumer buy-to-let side of things, which, you know, is not really our forte. So it is a little bit of, you know, we do less of those because sometimes they just don't fit with criteria. But we are getting the inquiries for them. So I do think that the first-time landlords are still definitely there. They're just not really suited to our criteria. But, you know, most of our business has always been portfolio landlord, and we're still seeing those people coming in, definitely on the remortgage side. You know, people are always, when they come to the end of their fix, they'll always be gearing up to that 75%, which we can still do on standard properties and small HMO multi-unit stuff. I mean, purchases, I think, well, last month was a great month for us. I don't know about you guys, it was really busy, and there did seem to be quite a bit of purchase activity, but I think now with this second lockdown it has kind of dropped a little bit. But yeah, I think there's still definitely a mixed bag of first-time landlord and portfolio out there, but for us it will always feel like more portfolio landlord because our criteria is geared that way.
Yeah. Helen, anything else to add on that?
No, I agree entirely with what Beth said. I think because we allow £5 million with ourselves in terms of overall landlord exposure, and as many buy-to-lets as you like in the background, for those people who certainly have massive portfolios, it works really well with us.
Okay. And what should, I'm just conscious we're running out of time, what should you know, give me 2 pieces of advice from you guys for a broker right now in the current climates, especially regards to buy-to-lets, HMOs, multi-units and so on.
I would say never be afraid to ask too many questions. You know, I get so many cases where there'll be one tiny bit of criteria that somebody has missed, and often it can be detrimental. So always ask as many questions as you can think. The other piece I would say, Always get your packaging sorted, because at the moment, were you going to say that, Helen?
Yeah, absolutely. Package it as much as you can up front.
And that's obviously one of the biggest benefits for you guys is, you know how to package for us. You've got that experience. You've got you know, relationships with us in the office and those in the office. So it's always good to have all of those documents, everything there. And, you know, valuations are taking a little bit longer at the moment because, of course, there's difficulties of getting into properties and that kind of thing, and if people have to self-isolate, etc. And so getting all of those documents to us, you know, as they should be, as quickly as possible, is absolutely paramount at the moment. So yeah, definitely something that you guys can help with.
Yeah, great. Helen?
Yeah, no, for me, the absolute key point is packaging up front, especially at the moment. If it's taking us 3 to 5 days to assess the application, in theory, if we've got all of that paperwork there ready, we can just get the case moved on, and then it's just reliant on the valuer. So, you know, the aim of the game is to get it through the process as quickly as possible for you guys. And, you know, you're very good at packaging. So if we maintain those standards, then, you know, your brokers will get their cases more quickly. So.
Thank you very much. I'll pay the £5 later on for that compliment. Thank you. From my point of view right now, I think my advice would be really go to town on blogs and articles in local papers, because at the moment, I think there's a lot of people out there struggling with specialist mortgages as a whole, not just buy-to-lets, limited companies and so on. I think it's the whole specialist arena. So if you're a broker and you're not in that area already, we're happy to speak to you. We're happy to deal with the lenders because we do it on a day-to-day basis, but we'll also give you some tips on sort of blogs. You can have a look at what we do on a day-to-day basis to get out into the local papers, get out into the local Facebook. We've got one in Horsham, for example, which is a Horsham Facebook page. It's got 36,000 people on it. You know, getting just a little snippet to say that you're a mortgage broker in that area would gain you a lot of friends. And of course, once you get into the buy-to-let side and the complex buy-to-let side, those clients who have also got friends who then come your way as well. So I think it's really advertise your expertise in those areas right now, because right now clients need us and need you more than ever. So anything else to add, Landbay ladies?
We have a new DIP system, which I'm sure is probably more beneficial for you guys, for your guys, Dale. So anybody who may have used us in the past or used us via Impact in the past will remember that our DIP system was a little bit tedious because we did go straight to FMA. So we need you have to provide a lot of information up front to Impact just to get some kind of you know, decision in writing anyway. And we changed that. It was before COVID. I think it was sort of February time.
Yeah, it was literally just before the lockdown.
Yeah, just before. So we didn't really have much time to kind of go out and promote it. But it, you know, take you 5 minutes. It's a soft footprint. It checks the credit. And you know, credit is, we aren't terribly flexible and adverse. So for us, credit is quite important. So we need, it's good to be able to find it out straight away. And you know, if it's a decline or an accept, it is instant. If it's a refer, as I said earlier, it's sort of 24 to 48 hours. But it will take your guys 5 minutes to key one in, so they're not going to be sitting there tearing their hair out keying the FMA, which I know I've sat with some of the guys many times and to help them do that, because I know how it can be.
I've used it. If I can use it, anybody can use it. So there we go.
Exactly.
That's the best compliment you can have.
Yeah.
Brilliant. Thank you very much for giving us your presentation and your advice and input on that. And thank you to the audience for watching. Really appreciate it. We are doing these every Wednesday at the moment. It's about 12:30. Look out for the flyers for the next lenders. But in the meantime, thanks for watching. Keep well and stay safe.